Jefford again from Rubik's Academy. Alright, so today we want to look at perhaps the most talked industry for this entire pandemic, and that is the airline industry. The airline industry. Alright, now for the airline industry, I already given my predictions before. I know that air ticket prices are going to go up. I know that social distancing may become a norm on airplanes. And overall, the airline industry is going to see a huge reduction in sales. All right, that is my prediction. All right, because a lot of the non-essential travel will be cut down. All right, and for people who are, especially for the European airlines, the European domestic airlines, a lot of the people who used to take plane may want to take train after this pandemic. All right, so that's going to affect them a lot. All right, a lot. Okay, so without further ado, let's go into today's two stocks. Okay, today we're looking at Delta Airlines and United Airline Holdings. Okay, so let's scroll down. You can see massive rate numbers here. Now, I just want to talk about these rate numbers for a while. Okay, it's very important to differentiate between business fundamentals and market perception. The market can perceive stock price to be going up and down because of all the speculations being made, because of government intervention, because of insider news. But at the end of the day, it is just perception. It is what the market perceives the stock price to be. So the market can easily go wrong. The market's view can easily be overvalued and undervalued. But what cannot go wrong, I mean, assuming they didn't conduct accounting fraud, okay, assuming the company did not conduct accounting fraud, what cannot go wrong is statistics, is financials. That is what cannot go wrong, assuming their books are clean, nobody doctored their books, right? So, for me, I always like to look at business fundamentals. I always like to look at the pure financial ratios that make a company tick. I don't like to look at all these things, stock prices, all that. I mean, it doesn't matter. Why are you looking at stock prices every day? If you are a value investor, you put your money right there, you let it grow. Let it grow. All right? It's just like how Warren Buffett put his money into Coca-Cola for more than 10 years. Okay? Same thing for all the other value investors. Okay? John E. Khan, all these other value investors, George Soros, they put their money there and leave it to grow. They don't look at stock prices every day. What's the point of looking at stock prices every single day, looking at a chart when you know that the growth isn't going to come like that? If stock prices go parabolic overnight, it is not a good sign as well. It means that there was and could be market manipulation. You don't want to invest into a stock that can so easily be market manipulated. You want to invest into a stock that is a value growth stock, meaning that the share price goes up steadily, gradually, and not go parabolic overnight. Simple. All right? So, in my opinion, you shouldn't be listening to your family and friends about, oh, this stock is hot, that stock is hot, look at the latest crazy stocks. Whatever the news is advertising, that has been sensationalized. That is what speculators are looking at. If all the speculators are looking at a stock because of the amount of media coverage that is wrapping it up, it means that this particular stock is going to see what I call a lot of hot money going in. And hot money can easily turn cold, meaning that money that has been easily invested has easily taken out. So that is what results in wild moves for any stock. Hot money. You don't want to invest in a stock where there's so much hot money because you are a value investor. You want to invest in growth stocks that steadily go up. There's no point in your stock going parabolic. All right, that just shows that there's so much speculation and it's not a good sign. Okay, so today, Delta Airlines. Now, earnings per share, $7.47. Okay, earnings per share. A reminder, what's earnings per share? Earnings per share. Earnings per share is basically all outstanding shares net earnings divided by all outstanding shares. All outstanding shares includes restricted shares. Okay? The only thing that is more than outstanding shares is authorized shares, the total amount of authorized shares by a company. Okay, that's the only thing that is more than outstanding shares. Any share that is traded on the market, not on the market, released to investors are considered outstanding shares. That's why outstanding shares includes restricted shares. That means shares held by employees of the company or held by key stakeholders and they are not allowed to sell. Those are also included. Okay? So earnings per share is $7.47 if you scroll down. For United Airlines, $10.36. Okay, so it's pretty good. For United Airlines, it's pretty good. Earnings per share is looking healthy for United Airlines. Okay, but I just want to remind all of you that earnings per share is only one side of the equation. It's only telling you how much money the company is making, but it's not telling you how much money the company is bleeding. So that is only one side of the accounting book. Okay? So as you can see, United Airlines doesn't give any dividends. Delta Airlines gives a dividend. All right, dividend per share is 1.51. It's okay. It's not so good. But what is interesting to know is that Delta Airlines has a Piotrowski score of 9. United Airlines 7. Okay, what is the Piotrowski F score? So it is a number between 0 and 9 that is used to assess the strength of a company's financial position. All right, if you have to know what it consists of, just go to Investopedia. So these are the matrix, all the financial statistics that are taken into account when they calculate the Piotrowski score. All right. So in other words, the closer it is to 9, the stronger a firm's financial position. The further it is away from 9, the weaker the company's financial position. All right, simple as that. Okay, so if you click here, it shows you the 3 things that Piotrowski F score is calculated with. Number 1, profitability. Number 2, leverage. And number 3, operating efficiency. It's all there. Okay? So Piotrowski F score for Delta Airlines is 9. For United Airlines is 7. It's not that big of a difference, but Delta Airlines is still slightly better. And after all, the maximum score is 9. So yeah, it's pretty good. Okay, scroll down. Let's go to its financials. Now this is Copa Holdings. Delta Airlines. So Delta Airlines, we're looking at some important statistics again. Okay, gross profit is about 4 million times 1,000, so it's 4B. Okay, 4 billion gross profit. Why am I multiplying that by 1,000? Because number 1, there's no way Delta Airlines made just 4 million in a year. Number 2 is because they already stated here that all statistics have to be multiplied by 1,000. Okay, this is what I mean, multiplied by 1,000. Okay, so 4 million multiplied by 1,000 is 4,000 million, which is 4.7 billion. All right, so gross profit is 4.7 billion. Net earnings, right, is 1 billion. Okay, not too bad for United Airlines. Let's take a look at Delta Airlines. Delta Airlines, let's go. Gross profit is 8 billion. It's much more than United Airlines, much more. Okay, net earnings 3 billion. So it's about 3.5 billion. It's about 3 times as much as United Airlines. So in terms of money coming in, definitely Delta Airlines is much stronger than United Airlines. That is very possibly the core reason why it got a higher Piotrowski F score. That is a very viable reason for its high score. All right, because of the sheer amount of profits that's coming in. All right, that has driven its Piotrowski F score up. All right. Now balance sheet. Okay, as those of you who know me, you know that I just look at a few things. Okay. Number one, I look at net profits earning margin. All right, so you can see that for Delta Airlines, the latest quarter, they have a 7.7% net earnings profit margin. Okay, I think it's pretty healthy. It's not too bad. Gross profit margin is 19.357%. For me, I like to look at net because net is the one which really tells you how much cash flow the company has after all its spendings. Okay, the next metric that I like to look at is return on equity. All right. So return on equity is very important because it tells you it basically tells you the return on shareholders' investment. So for each dollar that the shareholder put in thus far, okay, it's not just the initial startup of the company. The shareholders could be constantly or actually injecting capital on several occasions. All right, they could be, but most importantly is the fact that out of all this amount of money that has been injected, how much percent is being given back to them on a monthly basis. That is what we mean by return on equity. Now, return on equity is very important because when we talk about return on equity, it means that the core investors of the company, the amount of wealth this company is generating for them. Because if this company is not generating enough wealth for them, number one, it points to the fact that the company is retaining too much earnings. Okay, now, then you have to ask yourself why. Number two is this. Okay, it points to the fact that is this company creating value or not creating value for its investors? Okay, because if their core shareholders are not getting a good ROE, how can you, a mere shareholder, get a good stock price? How can the stock price go up if the core investors are not getting a good ROE? Do you understand what I mean? All right. If me, the guy who put in money into the stock, is not seeing wealth come back, how can the stock price go up? Simple as that, right? It can only go up. Stock prices can only be healthy and sustained by growth if the company is generating real value for its investors. And ROE is a good metric to tell whether the company is generating good value for its investors. All right. So the ROE for Delta Airlines is good. It's 24.48%. Excellent. Anything at 12% is average. Anything above 15 is excellent. It's good. 24.48. All right. Now let's do a United Airlines. $10.756%. It's a little bit below average. All right. And this is probably because it's just not taking cash as quick as Delta. Delta is earning 2 more billions. It's 3 times of the of the net earnings of United Airlines. So that could be the reason. All right. Okay. There's one more matrix called returns on invested capital. It's different from return on equity. It's different, right? But we'll go into the calculation of that. Returns on invested capital is not reflected on this platform. You have to calculate it yourself. All right, so it's a bit more tricky, but we look at what's reflected thus far. Okay. Then you have debt to cash flow. So for each dollar of debt, they have $4.63 of cash flow, which is good. Okay, it's about 4.6 times of debt. I think that is healthy. It's healthy. Okay, it's not unhealthy. All right, next. Debt to assets is 0.442. Okay, so for each dollar of debt, they have 0.442 worth of assets, which is about half, which is good. Okay, anything at about half is good. That means for each dollar of debt, your assets can pay for at least half of your debt, which is good because assets is just whatever the company has. Okay, you haven't taken into account the cash flow, the sales, and all the other intangible assets. All right. Cash flow to sales, okay. Operating cash flow to sales is important in detecting a company's sales efficiency. How much cash can a company generate from one sales point? Okay, that is the main gist. For every sales that is closed, how much cash can the company generate? All right, how much cash and how fast? So that is operating cash flow to sales, because this again is important in the sense that if a company is generating cash flow from sales too slowly, the overall cash flow of the company is going to come down, and that is going to put the company in a weak position against a recession. All right. So operating cash flow to sales is about 12.14. All right. Look at Delta Airlines. Debt to assets is 0.334. So debt to assets, Delta Airlines is not so good. All right, meaning that it's not as recession-proof as United Airlines. But okay, because of its mere difference in the earnings, I do not think that this will be an important metric. The difference between debt to assets for United Airlines and Delta Airlines is insignificant compared to the difference in gross and net earnings. Okay. Debt to cash flow 3.36. Debt to cash flow 4.63. All right. So in terms of debt management and amount of money that the company has owed, I feel that United Airlines is owing less money. That is why their debt to cash flow is better than Delta Airlines. But still, the difference is insignificant in the face of the raw difference in net earnings. All right. Operating cash flow to sales, United Airlines is 12.142. Delta Airlines is 15.140. So you can see that for operating cash flow to sales, Delta Airlines is stronger in the sense that it is generating much more cash flow and faster cash flow from per sale point. All right. I mean, for the airline industry, it's pretty simple. This could just mean that the fact that air tickets for Delta is more expensive. Now that is important because the amount of cash flow a company has will dictate how good or how hedged they are against a recession. All right, how recession proof they are. Of course, ultimately, how recession proof they are comes down to net earnings, right? Comes down to net earnings and all these debt ratios. Okay, so all in all, looking at the debt ratios, looking at the profit ratios, I would say this. I would say that United Airlines has definitely borrowed less money. They are in a position better able to pay back the investors. They are more recession proof. Okay, but in the case that a recession doesn't come, at least based on what I see for financial matrix, Delta Airlines is in a better growth position. In other words, the stock price of Delta Airlines can go further than United Airlines. That is my perception as of now. All right. So that's it for this episode. Thank you very much. Tune in again to the next episode. All right. Thank you. My name is Japhet from Rubik's Academy.